All right, let's do this. Good morning, everyone. Happy Labor Day to those of you who celebrated, those of you in the States. If you're here for the first time, my name is Deeyana Angelo. I've been trading the futures markets for 11 years, but I've actually been trading for 16 years. It's going to be 17 soon. Oh dear, oh dear. So we're going to have a look at what is going on today, but for the New York products, I doubt that there's going to be that much action. Gold moved overnight, so this P&L that you can see is from a little overnight trade because I was assuming it's going to be pretty quiet, but at the same time, gold is in such a big uptrend that I figured, it might be worth doing that. And because it was a combine trade, I did not lose sleep over it, so that was good. All right, so I might have a look at DAX today. I think we want to focus on Topstep X, but until they get us European products, especially on a holiday day, I think I might be forgiven to actually look at DAX for this one day as a special situation, and the reason why you would consider trading Eurex related products once they arrive. From what I saw on the roadmap, so let's have a look at DAX posts. Add DAX. Suggestion to add DAX. Add trades and blah blah. DAX. Can DAX be added? Please add DAX. Dee wants it too. Please add DAX. Can you add European indices? DAX. So, a lot of people want it because it's a great product to trade. It's drama free. It is my absolute favorite for London, right? So if you look at one of the bigger posts, so let's just go to Eurex now. There is a post with 90 upvotes, right? And it says status planned. Now, initially this ETA was set for June the 30th, and then for some reason they decided to just put it on the back burner. Obviously, the Europeans are not happy about that. And now they're saying that November the 1st will be the one to get it. Now, the problem with if they do postpone it again, DAX goes a little bit quiet through the second part of December and first part of January. So that could be a little bit of an issue, So I do hope that they do bring it by November the 1st. And if not, well, Europeans will be not happy again. But, it is what it is. So we're just going to hope that they are working on it and that they're going to get it to us by 1st of November. All right. So before we carry on, somebody's asking, Oliver is asking, London close will be the close for the day. I mean, London is just trading as normal, and futures largely trade, 23/7. However, London closes at 4:30 p.m. my time, which is, oh God, I always get my time zones twisted. I should probably have like those multiple clocks where I can just kind of have a look. So what is that? That is 11:30 a.m. Chicago time, right? Or is it? Yeah, I think it's 11:30. I don't know. So yeah, it's 4:30 p.m. UK time. So just do a time zone conversion and see when that falls. Now, for some of the other products, like crude oil is actually doing an early close. So it's going to be probably quiet, right? We have like a double whammy of Labor Day and NFP week. So it's very likely that even when we come back tomorrow, there is a lot of news this week, but it's very likely that we're going to have a reasonably quiet week up until sort of Friday. And there is a possibility in equities to have zombie rallies on very low volume where you're just going to trickle up. But there are some other news. There's some other news that could bring us a little bit of action this week. However, in my experience on the vast majority of NFP weeks, they're kind of waiting for that to be out of the way before they really start coming back to their desks. In London, market is not closed. We are trading as normal. Eurex in London and, Germany and UK, we don't celebrate Labor Day. So this is just like a standard day. We did have the summer bank holiday last week, but I completely forgot about it. I probably should have taken that day off. However, I made it into a nice Q&A session, and I think everybody got a lot out of it. So in the following year, I'm going to try and remember to book those ahead of time. But yeah, so let's have a look at what's happened in DAX with the view that it is holiday, very quiet. Like if I look at gold, it's only moved about 50 ticks barely. Same thing with crude oil. But DAX has already moved about 160 ticks. 160 ticks. So here's the DAX chart. Again, we'll go back to Topstep X. I'm just going to do a quick one. So we opened below value with a mild imbalance and immediately went away from it. But then that was quickly reversed, which is something that you do see a lot during DAX. Initial balance, you usually get this one move for the first 30 minutes, and then that move is faded on the vast majority of days. So now we have a range, right? We have a range, and if we manage to go above 19,000 with quite some confidence, that's where I will be looking for further momentum breakout longs. However, if we stay inside the initial balance, or we don't go above 19,000 and then we do a failed auction, there is my average daily range high right around that level at 189.93. So if we fail the auction from there, I definitely will be interested in a short. However, one thing to remember with DAX is that DAX is not very whippy. It doesn't run stops like crazy. It doesn't move in the blink of an eye. So really, when I'm trading DAX, I will be using cues from 15 and 30-minute charts and then executing on usually anywhere from about 20 to 35 tick stops, and then I usually let that run for about 2 to 3 hours. So it's not exciting to watch. It's not, a spectator sport. So my DAX trades are generally pretty drama-free, slow, grinding in one direction, and then after 2 to 3 hours I finally get about 70 to 100 ticks, depends on what kind of a day it is. However, bear in mind that once DAX makes up its mind on the direction, it can trend pretty hard, right? This is where I suppose it's easier in some ways, but also a little bit more difficult in other ways. And typically the first momentums that you see earlier in the session, they will last for about 3 hours. Now, once the 3 hours are done and once you start getting into the overlap, you can have an auction fade. So if you've missed the majority of the move that was quite obvious, you may not want to plow into yet another momentum trade because there are those fades that happen into the overlap. Today, I expect that overlap to be muted because we're missing a whole bunch of volume from the States, and I'm not expecting any kind of fireworks. So we'll see what happens. Now, I see gold is moving, but we still have this Tokyo high, Asia high. And before we do anything, I want to see that get broken. I mean, we might get the zombie rally in gold. Like I said, I did run an overnight long on the account that this was pretty strong, a strong uptrend, and on the account that we did come up to some lower areas of demand, which we then took out on a lower time frame, probably reversed, and now we're kind of heading back up. It finally unglued itself from VWAP, overnight VWAP. I use overnight VWAP as a gauge for where we are, what direction we have. So let me just focus on that a little bit more. And now, if we can go above the Asia high, which is at 25.37.3, for those of you just listening, that would be maybe another long. But again, it could be a scalp as well if we fail to gain any momentum with any sort of confidence above that price. So that's kind of a line in the sand, either or, go long, else go short, right? That's how I like to look at things in very kind of conditional logic terms. And we'll see what happens with this. Obviously, a little bit risky to go against the trend, but I think we're low enough in the range. If we go up to some sensible areas like the 4-hour chart, this was the low from 28th of August. And this was made pretty much during the overlap. So from about 11 till 2. And we had some demands kind of further down. But one takeaway is that I also use my own concept of quartile points. So what I do, it's kind of like fibs, but just without the weird numbers, right? So, and I need to have some sort of pullback in order to trigger the extremes of the established swing. So that's the gist of it. So I find a high, I find a low. When the price crosses over 50% of it, that's not an entry. That's just a trigger for, yes, we have a swing. Now let's focus on swing extremes. And then I call the Q low, top and bottom quartile. So Q high, Q low, quartile low, quartile high. So I don't necessarily need the price to hit like do or die to hit like the demand or supply areas, as long as we are in that top and bottom quartile of the observable swing. So hopefully that makes sense. If you have any questions about that, pop them in the comments. But that's been kind of transformative for many people who are just staring at the supply and demands that are in the middle of the range, and then this sort of thing happens. You know, we clearly have, let me grab a rectangle. So we clearly had some sort of a demand here that was reactive. But if you look at the originating move, the actual originating move, and I'm going to remove this one, it started off like down here. Like it didn't start in the middle of the range, right? So you had a low, you had a high, bit of messing around into the older supply, then move away, then again messing around in the middle of the originating swing, and now it gets broken. And actually, in my experience, these sort of middle of nowhere areas, they can be reactive, but they will frequently be the areas where you see the most stop runs, most liquidity grabs happening. So I actually come to expect those unless we're at the bottom or top swing. The larger the time frame, the more accurate the zones will be. So if this was happening on the daily, then this zone in the middle is absolutely game for intraday. But because we're coming down to a 4-hour chart, a little less accurate. So you have to be even more selective with what you want to see around particular zones. So there are opportunities everywhere. It's just how you approach them, I suppose. And how you, so somebody's asking, can you go over the trade that you took? That is what I'm doing, right? So this is exactly the trade that I took. I was looking at this as a potential area of interest with a view that at Asia Open, and actually I like to use the Shanghai hours, because that is when all of the Asian exchanges are that active, and that's when you see most of the volume, which in my time is like 1:30 a.m. So what typically tends to happen at 1:30 a.m.? You get a fake out move that typically does a stop run through some of these levels and then reverses, right? So that was the trade that I took. I expected a break through the lows as a liquidity grab. You know, we kind of ran out of steam, started to consolidate, and they need to grab orders from somewhere. You know, the moves are always happening when there is enough momentum, energy, strength behind them. If you don't have that, the reason why they do liquidity grabs is because they need more orders. So they go to pick up more orders, and then you can have an observable move. So that's what I did. I grabbed probably about 70 something ticks, or whatever this was, maybe 78 ticks with some commissions. I only ran a 1-lot trade, and it was a very kind of drama-free trade. But I did stay awake pretty late last night. I've sort of been slipping into my night owl mode every so often. And I've seen that some people are convinced I'm a vampire because it looks like I never sleep. I do sleep, I promise. So yeah, the trade was an expected stop run through the middle of the range demand for the liquidity grab to go higher to some of these more interesting areas where we had a lot of sellers, and for now that is a ceiling. That is where the market is so far having trouble going higher. But, gold has been in a pretty fierce uptrend, and that kind of made sense. So hopefully that's something you can take away from this analysis to effectively look at originating swings versus swings that are in the middle of the previous range. It doesn't have to be complicated, right? High, low, are we near the top or bottom quartiles? No. Okay, we're in the middle. It is a range. Let's expect a stop run through it. It's not super complex, right? I am Tyrani says, do you mind sharing any resource you've used? I'm not sure what that means. So is this meant for... I think this is meant for Lido. I don't think that's meant for me. So yeah, if you're having a conversation with someone in chat, might be an idea to keep tagging them, because then I don't know whether the question is meant for me or meant for somebody else in the chat. Yeah. All right, so Aman wants to know, have I traded DAX? Not today yet. So I very rarely trade like guns a-blazing on a Monday morning, right? I typically purposefully miss the first move, and then I will see what we have. I don't like trading the opens. I don't like trading with lack of data. I prefer to give the time for the development of whatever the market makers and institutions are doing. And then, because guys, we like, I've got a live account both on Topstep and my own, and that one is reasonable size, but it's still like we don't have any effect on the market. Even in that account, the largest I've traded, like before I kind of dragged down some cash from it, it was like 40 lots, maybe like 80 lots during COVID. That was quite a lot. But then, you don't need that much risk. Like, COVID was an extraordinary opportunity. It was one of the best years that I've ever had in my life. And now I just don't feel the need to trade that large. And I've also had some health issues that are not really helping with, the stress. Let's put it this way. But I'd rarely trade with the first open, And why? It's because we are like an ant on an elephant's back, right? We have no impact on price. Like, you have maybe a minute impact if you were to trade 20, 30, 40 lots, and only in thinner markets. But as a general rule, your 1 and 2 lots in live markets on these products, they're just not going to matter. So what we need to do is to look at what market makers are doing, to look at what institutions are doing, and then to effectively piggyback on their moves. That means you're at a disadvantaged spot right off the bat. So by you plowing into a trade as soon as the market opens and you have no idea of direction, and then they just whip you out because that's what they do, and then you go, oh, the market is rigged. It's not rigged. The market has a mechanistic action to it. And if you are constantly losing the open, stop trading the open. Give it 30 minutes, sit on your hands on the butt for the first 30 minutes. If you can't do that, find something to do actively during that period. So, there's a very good saying that says the secret of patience is doing something else in between. Couldn't agree more. Even when I was working in offices, they were very kind to let me install World of Warcraft. This was many years ago. And then I had World of Warcraft on one screen, and then I would be waiting for my setups and observing the market on the other screens. And it was great because it meant that when I didn't have a setup or wasn't bored out of my brains clicking buttons, I could do something else. Now, you could do anything else that will take you away for that time period that is historically the worst for you. Now, I don't know what that time is for you. I know that for me, traditionally, trading during the first 30 minutes, even for the first hour and a half, has not really been that consistent. So we want to trade when we're most consistent. And I will say that this year I did fall into the trap of let's make my trading a little bit more interesting. And then I started doing things that I've never really done for 11 years, where, you know, I tried to make my trading into a spectator sport and to make it all look a little bit interesting. Now that to me led to, yes, some profits, but also then I lost the plot when crude oil went quiet. And then it was just very difficult to turn it back. So now I've gone back to my low frequency trades, 1 to 3 trades per day, usually per product. If I've had one really good trade that reached full target, that would be the only trade that I take. Okay, especially in my live account. Combines, I might trade a little bit more, but that's why we have combines. So once I've done that one trade, it reached target, I will then move on to the combines if I want to keep being involved in the market. Now you can do the same if you are in combines, but you don't want to derail them anymore. However you want to trade for experience, right? You can go into your practice accounts and, you know, go nuts. Go, you know, go and live out all of your grasshoppering over trading dreams in practice accounts, and then come back to the live with a business mindset and following your plan and not doing stupid shit. Okay. Sorry, you know, for, you know, maybe using you know, such a word, but I think to really, you know, get the point across, I think is the only way. All right, let's have a look at some more questions. Did you stay awake at 1:30 a.m. UK time to trade the Asia session? No, I don't really actively trade the Asia session. If I do something like this, it will be in a combine. I will be perfectly honest, I will never kick off an overnight trade in my own live account, whether it's with Topstep or with my own firm. Never. Why? Because I would never sleep, right? I would be constantly waking up to check the trade. I will constantly, like, I'm not one of those people who can sleep through trades. I've done swing trading for the first 5 years of my career, and that was the reason why I had my first 6-figure account, right? But I'm much older now, and I really need my sleep. Like, I don't sleep that much, but I do sometimes take power naps, and I'm a big proponent of yoga nidra. Nidra means sleep. So it's not yoga where you're like sitting in like weird positions trying to rest. That's not what it's for. It's literally laying down in the most comfortable position that you can possibly find, and then following a very beautiful practice of body scanning, and you scan different parts that you didn't even know existed, and that focuses the mind and creates a whole bunch of sort of biochemical things that happen in your brain. And they've done some studies on this, and a single sort of 40-minute yoga nidra session is equal to about 4 hours of sleep. And I can tell you, whenever I skip those, I am much more anxious, and I'm not an anxious person at all, quite the opposite. I've never had issues with anxiety, never had issues with depression. I'm probably one of the most stable people you will ever meet in your life, and I think you have to be for this job. Whoever has, you know, troubles with impulsivity, troubles with anxiety, or, you know, mood swings, mood disorders, I would say trading is probably not the best choice of profession, because it is very up and down. Like, I love it regardless of what happens, and I've spent many years ungluing myself from the outcome of the trade and the sense of worth or whatever. But it is, you know, it is funny how much I see people getting completely depressed over the fact that they can't make it work or whatever, but at the same time, they're not doing the work. They're not journaling. They're just sitting down, clicking buttons, and expecting that somehow, magically, someday, it's all going to work out. It won't. It is a study of data science, analytics, probabilities, and then some creativity and art, right? How you execute. But obviously, self-discipline has to come into it at some point. Most people jump to psychology way too quickly, in my opinion. Way too quickly, in my opinion. Because they think that psychology is going to sort out a flawed method. No, find good levels first. Sort out your stop loss sizes and targets by looking at your MFEs and MAEs. Okay, maximum favorable excursion and maximum adverse excursion. What are those? A mouthful. But MFE means how far during the trade life did your trade actually get to? At which point did it turn away on you, right? If you were looking for, let's say, 70 ticks, but most of your trades on average turn around at 25 ticks, that means your trade locations are terrible. You're not picking the right trade locations. You're picking scalpy locations and then expecting a semi-swing trade to work out. So that's a problem with the approach. It's not a problem of psychology, And then similarly, if all of your trades always go into some drawdown or quite a deep drawdown, that's called the maximum adverse excursion, how much drawdown you suffer during the trade life. And likewise, you can look at that and go, I always go on like nearly all of my trades. I'm using a 25 tick stop, but all of my trades go to 22 tick stop. That means instead of entering right on your signal, got the signal. Now let me subtract from the entry those 22 ticks. And then I'm going to enter. See what happens there. So that's the power of data, power of analytics, and then you mold it into your own creativity. Trading is probably the only profession out there that has a huge mix of analytics, hardcore data with creativity. The only thing, right? So I think coding also has a degree of that, but in code you have to follow execution flows and some pretty hard logic. In trading you can flip it however you want. So this is where thousands of outcomes of the same strategy, same approach come from, because every person trades through the sort of a lens of their own life experiences. So yeah, I don't always stay up at 1:30 a.m., but sometimes I can't sleep, and then I look at the markets, right? What else are we going to do? We're traders. Is overnight VWAP different to the regular VWAP indicator? So you can anchor the VWAP in different ways. I'll be honest, I don't know how to anchor the VWAP on this platform. I will learn. But for now, the session VWAP that they have here is actually the overnight, from what I can tell. Yeah. But if you wanted to change it, they do have weekly, monthly, quarterly. I have no idea how to anchor it though. But somebody in chat the other day, they said that there is a way to anchor VWAP. Maybe it's a different indicator. Let's see. No, so I don't see it. I don't know how to do it. I'll be honest. Now, before we go any further, I do have some updates on Topstep X to talk about. So, you know how you have the personal data loss limit? Well, apparently it had a bit of a, I wouldn't call it a bug, it was a logic behind it, where when you set it for the first time, I think the next day it wouldn't really trigger and you would have to reset it. Well, I believe that they have now managed to sort that out. So we have personal data loss limit. If you were to set that to something and just go to liquidate, it wouldn't stop you from opening another trade, but it would kill the existing one. And then nothing else would happen. You could still carry on, I think. And then if you wanted to increase that, you could increase your own PDLL and then keep going. Obviously not great for those of you who have problems with self-control. So therefore, in order to really lock you out, you have to set it to liquidate and block. But from what I can tell, this you would have to kind of almost set every day because it would reset. Well, now that's not going to happen. I think if you have it on liquidate and block, it's just going to keep it there for the next day and the next day and the next day. So that's one update. Second update is in relation to the executions. So if you now, I don't like executions there because again, it makes me focus on other things. Once I'm done with the trade, I want to get it out of my head. I don't want it on the chart. I don't want it in my head. I just want to completely reset for the next one. And chart execution sort of mess with that process. So I don't like to have the markers at all. But if you want to do the post-mortem at the end of the day, that's a very useful thing. Now, before they were just standard, I think, red and green colors, which were a little bit difficult to see. Well, now you can change it to any old screaming color that you want, and they will be that color. So it's probably a much sort of better option to really see those executions if that's what you want. Like I said, I don't want them, so I use the trade analytics from Edgewonk myself, and I'm used to that platform. So I look at other things, not necessarily the quality of the entry, because every time I do an entry, I do have I suppose, the gift of photographic memory. So whenever I go, what trade was that? I can recall it instantly. But once I'm done with it, if I'm not actively thinking about that trade, I don't want to know it. I forget about it. It is not bothering me at all. It's like somebody wipes my memory. It's a bit of a weird thing. It's kind of like locking it into a vault. And then when you need to, you can recall it, if that makes sense. I don't know whether I'm making sense here. But yeah, you have like good control over what you're remembering and what you're just not interested in anymore. Willie Lopez says, interesting, can you talk more about how you played World of Warcraft and stayed paying attention to the markets to wait for your setup? So again, it's a multitasking thing. So I always, now remember I trade through a systematic method. I've shown my DAX chart earlier and you can see a whole bunch of things plotted here. Well, now we have the Bloodtick indicators, but back in the day, I did all of this myself. So one of the reasons why I can do a very similar analysis with basically no indicators is because I did all of it manually, right? So if I'm looking at a supply, I don't have to have a rectangle there to show me that there is a supply. Like visually, I can already see that this is where we came from. Okay, so when I look at the chart, I have pointers. I have orientation areas. And then if I wanted a value area, typically I would place two horizontal lines before the Bloodtick indicators came along. So I would say value low 255. Let me just see what that is. So it's 2, so 51.4. 51.4. And then value high 57.7. 57.7. There we go. So supply, value area, all the way up. What do we have? Gap. What's my my entry level? Value low. So sometimes I will, in fact, most times I will wait for the gap to fill, and then to also get an exhaustion of the average daily range. And I would also plot the average daily and session ranges. So let's do that too. Let's change the style of this. So instead of that, let's go dashed. So this would be my average session range. Sorry, average daily range at 58. So no, 48.4. 48.4. And then a more granular average session range. I'm going to put that in yellow. And I used to do this calculation in Excel. And my current average session range high for London is 43.5. So then, if you're doing something else, and I know this looks like horrendously complicated if you've never used orientation points before, but for me it's very easy, right? What is my primary setup? Up here. ADR high with value low, primary setup. What is my grade B setup that can come in intraday if we have a quieter day? Average session range high at 43.6 and then looking for a reversal, usually on a 15 or 30-minute chart. So I will not be entering it until we print that. Maybe if we have very, very large ranges and you have lots of volatility and stuff, you may need to front run these just to get a better trade location and stuff. But for the most part, when markets are reasonably normal, I don't nitpick on entries. Sometimes I will front run a failed auction if we have a large initial balance, but again, outside of that, it's all level, price action, entry. So like a little decision tree. Again, love my decision trees. So when I'm doing something else, you can even put alerts on, not yet on Topstep, but on Ninja you can do it. So you can put an alert to send to your phone. There's a service called ClickSend, and you can buy some like credits, which are really not that expensive, and then you can tie the line to an alert, and then once the price actually gets there, it sends you a text to your phone, so you don't even have to sit there. And that's how I spend a lot of my days. If I would be out for lunch or something, I always had those alerts set for my intraday levels, and I would typically set them at the beginning of the day, beginning of the session, and then go and do something else. I also used to go for gym sessions either before or during lunchtime. Depends. So sometimes I would go before work, but other times when I didn't really feel like getting up at 5:30 in the morning, I would then go and do my gym session in the middle of the day. And that would kind of, again, reset my whole body, my whole mind and everything, and I would come back to the charts fresh. So again, alerts, planning, pre-planning, that is key to being able to do other things. If you're expecting to just go in on random moves where you have no orientation points, then you can't unglue yourself from the screen. You always have to be there. But if you have an orientation level and a level in mind what should happen around there, all you've got to do is just wait. That's where the World of Warcraft comes in, or something else. Right now I'm playing Star Wars Outlaws. Started on Saturday. And, you do anything else just to be away from the screens. And then once your level is there, that's when you pounce. So hopefully that will help. Now for me, like I said, average session high today is not as strong of a setup as the value low / ADR high area for shorts, if I'm going to short this. And then for longs right now, that was the long that I ran overnight, went even higher, right? So we have some movement. But generally, that is the gist of how you do something else whilst also trying to trade. But, I have a systematic approach, and I have some very, very clear-cut setups. If you don't have that yet, you obviously need to work on that first. So you're not going to get there overnight. It's not going to be something you can largely take from others. Even though I teach all of my setups through my program, I still have people who prefer setups of, let's say, mean reversions than those that are involving the breakout of the initial balance range. And then again, I have some people who just love the breaks of initial balance range, but hate the reversals because they feel they can never do well with them. So everybody will have their own preference over setups. However, situational awareness is key in the way I trade, and I will change my mind on the fly sometimes. So even if I was looking at, let's say, a failed auction around average session range high, but instead I get a move through it, and then a value acceptance that smashes through all of these levels, obviously I'm not just going to sit there and go, I'm just going to short this. The market has showed you that it's ignored your levels, so you have to have a way to get in on those. And that's where looking at the real-time TPO profile comes into play. We're looking at low volume nodes as a potential areas to get in. Those trending moves can help. And obviously that's when dropping down to a very low time frame to take advantage of those moves on a smaller time frame on a pullback, rather than waiting for the full 30 minutes to happen. That's where those skills come into consideration. So there is definitely a progression of how a trader looks in the market. So I always like to liken it to playing a musical instrument. You can't learn how to play the piano by taking the flight of the bumblebee like you're never going to be able to play that, right? Ever. So you start with chopsticks. You start with chopsticks, right? But why? Because you try and fly to the bumblebee and you can sound like a lunatic. There's not going to be any technique. There's not going to be any accuracy. And you're probably not, your brain is just not fast enough to actually catch up with that, right? So you start on something simple. So in trading terms, you start on a slightly larger time frame. Something that gives you time for decision making. This is why it's good to learn on 30 minutes. Because it forces you to wait. Rather than going, I'm down to 1 minute, 30 seconds, 15 seconds. You know, it's a skill that takes a long time to develop. And then over time, your brain develops new neural connections and you can think faster and faster. Eventually, you get to a point where you can tackle the flight of the bumblebee or something like NASDAQ, right? Didn't Jay have a very good analogy for Coach Jay? For people learning how to trade on NASDAQ. He said it's like learning to drive a car on a Formula One track. Very true. So it's the same thing. Flight of the bumblebee and piano. So you don't learn on very technically difficult instruments that take a lot of speed of thinking and fast reaction times. You start off on, slow things, slow time frames. And then over time, you refine that. I know that this is not something that everybody wants to hear, but it is how it is. High-level skills always take time. So the longer that you can systematically work on one problem at a time, the faster you will get there. So haste makes waste. I have a tattoo on my forearm that says haste makes waste in my mother tongue. And that's very true, right? I live by that. I absolutely live by that. Because when you rush, when you are trying to get there ahead of time before your brain is ready, you're going to get yourself into trouble. And it's going to take you longer to get there. You do stupid things in the combines because you want to rush the process. It's going to take you longer. So just keep that in mind. Says D, what's your trading strategy, by the way? My trading strategy involves about 4 different pillars. The first one is looking at supply and demand on a larger time frame, so like a multi-time frame analysis. So I start from the weekly chart, sometimes even monthly chart if I have continuous charts. And then I see what the overall direction is. Do I have any swings? Do I have any obvious areas of supply and demand that are high quality? Have the previous areas of supply and demand been broken or not, which can tell you whether the trend is still going or not. And then also how well are we doing with the trend. Someone's at the door, so the Pomeranian is barking, and others might kick off too. So, yeah. Our Pomeranian is a very good watchdog. Nobody can pass by my door without her just kicking off and getting others to kick off. It's very funny. Right, so I started with supply and demand on larger time frames. If there's no good quality opposing demands, you mark the ones that are on the way. So for example, right now, we have a big demand here, and you can see that as we move up, we flip into demands, go higher, flip into demands, go higher. Very strong uptrend. And then I do the same for the daily chart. But at that point, I also start looking at some of the volume profile. Not necessary because it may give you very similar information, but sometimes if you've had just trends up, up, and up, you might be able to work out where the low volume nodes are a little bit better within that range, if that makes sense. So right now I see a bit of a low volume area right at 25.30 and then all the way down to 25.09. And guess what? That's exactly where we had that little turnaround and now going up to a long. There is now, after this development for London, there's a new supply on the daily chart with sort of an edge of the supply, the nearest edge of the supply at 25.39. Why do I say it's a nearest edge? Because that is where we kind of fell away from. So this whole area is a consolidation, and you're effectively your big supply here right now, not going too granular, is there. So I call these edges, nearest edge of the supply, the conterminous line, because they represent a market shift. When you have a consolidation, it's an equilibrium. At some point, that equilibrium needs to break to one side. Which side, we usually don't know, but we can use probabilities to sort of say, if you have a distribution, so, you rise up, you distribute, there is a high chance that you're going to go into a liquidation phase, right? You're going to go into a sell-off. So that's why whenever something starts to distribute after a rise in prices, we look for a supply to be created, and that's kind of what's attempting to happen here. So everything has been very range bound on the daily chart for a number of days now. There is a good chance of a sell-off on a very large time frame. Whether that's applicable intraday, whether that's going to come today, tomorrow, Wednesday, Friday, we don't know, because it's a big time frame. So you can't trade from big time frames. This is just contextual, directional stuff. So we've slowed down. Trend may not be as strong anymore, so caution needed. And then you got to go down to a 4-hour chart. Now on the 4-hour chart, I already start looking at things like the VWAP, overnight VWAP. How is the price behaving with VWAP? So if we assume that we still have an uptrend, this is my thought process, if we still have an uptrend, and if this 4-hour candle stays bullish, you will then have an intraday demand, a buy zone, that might actually get tested during the New York session. Like, let's assume this is a normal day, we don't have a holiday, we have full several hours of work to do. Well, if this stays, and then there's a test of this demand zone, that would be my area of interest. Once I'm done with that larger time frame context and just like pinpointing those large zones, I will go down to the 30-minute chart, look for the profile. How do we open? Where is the value area? Are we opening in balance or out of balance, and by how far? I use the TPO profile for that. We don't have it yet on Topstep. They are working on it. From their point on, I look at the initial balance. How did the initial balance established? Again, is it big? Is it small? Is it normal? Do we have extensions? That's the next part of the session. If we are extending upside, you can do an initial balance breakout. So, for example, let's say we dip into the demand area. So you connect everything together as a little story that you tell yourself in high pose. So you have the demand area, hypothetical. Again, not a signal service, just educational. Demand area on a 4-hour chart. COMEX opens, creates the initial balance and dips down into the demand, moves away from it, and then eventually breaks out to the upside with the trend, with the move, with everything. That will be your entry. That is your trade. But in order to get to that sort of a systematic, yes, this is definitely what's going on, we're being very selective. So we're not just sitting here, I think it's going to go click. Oh, shit. I think it's going to go that way. Oh, click, paper cut. So we're not doing that. It's being super selective in favor of lower accuracy. So you're not going to get these, a million times a day. You certainly can't do 30 trades doing this sort of analysis. And you will have lower accuracy. Why? Because you're aiming for more ticks. You're aiming for 50 to 70, 80, 100, 150 ticks per session. So naturally, that will always come with slightly lower accuracy. I did have isolated weeks and even months where I was like smashing it at like 79% accuracy with average of 1.8 R profit factor. That's crazy amounts of money, okay? But that is generally not that sustainable if you look at many years of trading. My accuracy usually floats at around 53%. But my risk reward usually always stays around not like 1.3, 1.5, and then at times of great performance, 2.3 if I'm aiming for more R multiples and sort of slightly better locations, if I'm like really trying to get a good trading location. But overall, if I'm just, trading normally, I'm not losing my eyes over, nitpicking on things. Typically, I will have 1.7 1.5 are, and 53% accuracy. That's like very good. And then if it's underperformance, I will still maintain the R multiples, but my accuracy will probably fall down to 42%, right? Every time I move away from that, and bear in mind, number of trades per day will weigh heavily into that equation. So if you start doing 3 trades per day one day, but then you suddenly go crazy and you do 15 on another, that's going to derail the equation. It's going to derail the numbers. So it's very difficult to do like anything more than about 3 to 5 trades per day and still maintain positive expectancy over time. But if you stick to similar number of trades, so 3 to 5 per day, similar risk reward, similar areas that you're looking at things, similar time of day, similar stop size, similar everything, it starts to introduce that low variance that Ben, the risk manager, really loves. So that is what we look for. You look for low variance in your P&L. And yesterday, some troll on Twitter was like, oh yeah, but where are all the people in the top 10? P&L is not the sole measure of somebody's profitability. We have many traders at Topstep who make 40, 50, 60K a year, but they will never be in the top 10, right? In a single year. Never be. So you can make a significant amount of cash and you will never make it to top 10 because some people are more risk averse, some people are a little bit older, or they don't feel the need to do, crazy amounts. I found that people who are sizing up, they tend to be slightly younger, right? They tend to be people in their 20s and 30s who still have, a lot of stuff they want in life. And they have that drive. But once you get to a certain point, you have all the houses you want. You have all of your cars. I have my 8 dogs. I don't go anywhere. I don't like going anywhere. I'm a hermit woman. And, for me, I just don't see at this particular time, I don't see the whole point of trading with 15 lots. Like, I don't need that, right? Now, also in the UK, it gets a little bit painful when you make like, $500,000, $1 million, $2 million a year, and then you have to give 40% of it to the taxman. So that was a bit of a bitter pill to swallow when it happened, because you're thinking, yeah, I'm settled, I'm rich, and then you're like, ah, yes, tax. Now, don't get me wrong, I love living in the UK. We get a lot of stuff here, and I would not really trade it for anything else. Even if I were to, go and spend a part of the year elsewhere, that would be like for a few months. I would always come back to UK. I love the weather. Yes, it's a bit rainy, but I'm not a huge fan of super hot weather. I quite like the fresh air and green stuff everywhere. So I don't mind a bit of rain. In fact, to me, pools and hot weather, it just gets a bit tedious. I would probably rather go do like a winter holiday somewhere than a summer holiday. And in fact, I very, very rarely do summer holidays. Summer vacations, you call it. Vacations, we call them holidays here. Dee, do you have any idea when an alert will be available on Topstep? You can have a look at the roadmap, right? As always, look at the roadmap, and then we go alerts. Very simple, right? So you don't really need to, ask us, the talent, on air, when are they going to be? Just go into your question mark, type in alerts, and there it is. So when is it? End of this month, ETA. 1.1K upvoters. September the 30th is when they're expecting the alerts to be available. Okay? So, it's coming, right? They're developing the platform. It's awesome. Do you speak different languages? Well, obviously English is not maybe not that obvious to some people, but English is not my first language. Serbian is, right? I was born and raised in Belgrade. And whilst I did grow up with English and with London in my life, because my sister was born in London, she's 10 and a half years older than me, so, she actually sometimes pops into this this stream here, and yeah. So I did start speaking English and Serbian from a very young age. So in fact, my sister was the one who taught me English when I was 2, and I grew up with it. So that's. But again, I grew up with it, but conversationally, I really wasn't there up until I was about 11. So I didn't really, I couldn't really talk to people in English that well until I was about 11. And then, I managed to learn English better. And then I also decided to move here. So from 11 onwards, English kind of became my second. I think I became like almost bilingual. And then obviously I moved to London myself as an adult in 2000 or so. And then I went to school here as well. So that really helped. And then after so many years living in London, I have an English husband. All of our friends are English, or Australian. So, I've just taken on a lot of the accent that sort of they have, but I still kind of kept a little bit of my own. So it's whenever I talk to English people, they can usually tell that there's something else there. But for most people, it's not immediately obvious. So I've had people going, "Are you Irish? No. You Australian? No." Yeah, like they literally list all English-speaking countries that they can possibly think of in order to figure out what my accent is. And I don't even know what my accent is. Every time I'm on TopstepTV, I take on some of the words that Hogue and MP say. So I start saying things like demand. It's like, since when did I say, I say demand usually, but now I call myself saying demand all the time. So it's a bit weird, but So yes, I speak 2 languages fluently, English and Serbian. I can speak a bit of Italian. I can also understand a lot of German, but I cannot converse in it. So if I am listening to Germans talking, I understand like probably about 70% of it. But I don't have the vocabulary ready to go. So that's me. So I suppose I have understanding in 4 languages, but I only speak 2 fluently, if that makes sense. The funny thing about English people is that their version of what it means to speak a language is quite different to mine. Because when we went to south of France for a vacation. When I first met my husband, we were, we started living together pretty quickly because we knew that was it. And then we went on a vacation together on a holiday. So I say to him, "Oh, can you speak French?" And he's like, "Yeah, I can sort of speak French." And I'm like, "Cool." So we get to south of France, and we're sitting in a diner. So I go, "Okay, so can you like order for us?" And he turns around and he goes, "Oh no, I don't speak it like that." And I was like what? So you don't actually speak French? And he's like, "Well, je m'appelle blah," and I'm like, "Yeah, well, I can speak French like that too, So, and that's like throughout the entire England. Like a lot of the times when somebody tells, "Oh yeah, I can speak a language," I would be a bit skeptical whether they actually can in this country. For me, speaking a language means you can converse in that language. Maybe I'm odd that way. I don't know. Dee, does your husband trade? No, but he was in the banking industry. That is how we met. He was a software architect for one of the big banks for many, many years, and he has a long sort of 30 plus years career in bulge bracket banking. But yeah, he's on the software side. He actually does help us with my Blatic indicators as well. So that is very nice, but he doesn't trade. He doesn't actually like trading. He doesn't like talking about trading. He finds it extraordinarily boring. And, our conversations are never, "Hey, I did this great trade," because he understands it. But he just doesn't want to hear it, Like every time I had so some people ask me how I started my YouTube channel is because I effectively had people from my environment that I was working with constantly asking me to explain setups. And then to avoid having to repeat it a million times, I started putting it on a website, eventually on YouTube. And then people started getting interested in it that didn't have anything to do with me. So, but before that came, my life was, constantly on like a messaging app. It was Skype at that point, me explaining things to other people. And it got to a point where, we would be at dinner and I'm like still typing, explaining setups and everything. And he's just sitting there and going, like, what are we doing? And then I tried to tell him, I was like, oh my God, I did this great trade today. And he was like, yeah. So what do you want to eat? Like he would just change subject constantly. And that's absolutely fine. I actually really love the fact that I get to not be in the whole thing all the time. When I'm with him, I cannot talk about trading because I know that he's not interested in it. Like at this point, he doesn't really follow things that much. He's semi-retired. So, it's one of those things where it's nice to not talk about your trading and not to be so obsessed with trading all the time. And, I stopped talking to not just to him, but to everybody else as well. And at the end of the day, if you try to talk to people, they will just glaze over because for the most part, people don't really understand what it is that we do, right? So I start going, oh, there's this great demand area on gold. And, I entered when the initial balance, and they're just like, what are you on about? So yeah, it's actually a good practice to train yourself not to talk about your trading and just to kind of go live your life, when you're not here. Okay, here's a very good question. Is 50 lots technically harder than 5 lots, or is it just mental stress with carrying a big size? So in the grand scheme of things, when you're trading something like S&P, and I know that we're up on time, but I'm willing to hang here with you guys for a few more minutes. So when you are trading S&P, 50 lots execution is not going to be much different than your 1 lot or 5 lots. You do a trade, it enters it. The problem comes, like for example, if I were to execute a crude oil trade 50 lots, let's look at the DOM for a second. Now, I have level 2 data. For those of you, I think the frequently asked question is, Dee, how do you get your DOM to look like that? It's level 2 data. You can sign up for it in your billing section. On Topstep, it is $39 per month. And it renews on every first of the month. So if you're going to sign up for level 2 data, today is the day to do it in order to get the full month's worth. Otherwise, they will just, renew it on the first of the month. That's usually how data packages work. All right. So if you look, so let's say we want to execute 50 lots in crude oil. How many prices do we have available? How many units do we have available per price? 11 at current price, 27 on the other price, 33, 18, 20. On the buy side, 10, 29, 18, 16, 25. We don't have 50 lots on any single price point. That's where the execution problems start. So now, you want to do a 50 lots in crude oil. You can't do it at once. And another thing to note when it comes to clearing houses, they prioritize smaller orders for execution. So if you have a 5 lots and somebody wanting 50 lots, the one with 5 lots is going to be ahead of the queue from where you are with the 50 lots, okay? So there's that as well. Therefore, if I were to just go in, I'm going to do a 50 lots in crude oil, you place it. 2 things can happen depending on the setting of your platform. You will either wait for the market to dip to the levels where there's enough prices, or the order will be cancelled instantly. So if you have it set to fill or kill, if it's a fill or kill order, rather than just, market order partial, fill or kill would mean that if you cannot get all of the orders out, kill the entire order. So cancel the entire order, right? Now, sometimes, you know how we go, there's liquidity up at X price. Well, now, as I'm doing this and as we're dipping down, we've had a 119 lots appear at 73.73. Now, if I were to have to execute 50 lots, I would need that price. I wouldn't be able to execute it anywhere else. Okay, this is where the power of the dome actually is. So if I have 50 lots to execute, I need enough liquidity. So therefore, I cannot just execute in the middle of nowhere. I need to go for those liquidity prices. Can you now start to understand how market makers think? If you have 100 lots, 200 lots to execute, you just cannot do it willy-nilly in one go, okay? But if you were to break that into several orders, this is where execution problems come from. And let's say you don't really know exactly your setup. How are you going to enter a large position size when you don't even know what you're looking at? You don't know your invalidation point. You don't know your zones. You don't know anything. And now you want to trade with size. Well, great. Good luck to you. But when I look at my levels, I know that I'm looking for shorts. This is where institutional trading is slightly different. If I'm looking at a setup around my ADR high and value low, I have an entire zone to work in order, right? So if I had to execute 100 lots in crude oil, I would go up to those prices. Well, this is gold, but let's say it's crude oil. Well, actually, let's move to GC, and then we can see what's going on with the dome. This is the one where it doesn't have 1,000 levels up and down. All right, let's go to crude oil. So let's say I'm looking at the supply all the way up here for my shorts, let's say, right? Well, let's go up and see what we have available at 76.80. So remember, hypothetically, we have 100 lots of crude oil to fill. 75.86. Let's go up. There is nothing there, right? So right now, there's no offers there. So therefore, I would need to wait until the price gets closer to see who else is willing to offer there, to give me an offer there. And then I will be able to kind of figure it out. So let's try doing it with closer prices just for educational purposes. And let's say we have 70 contracts to fill, right? And I want to do that, let's say it's 74.34, right? 74.34. Let's go up there. Okay, so here we go. So I have 70 contracts to fill. Is there an area with more than 100 contracts? No. So what I would need to do, I would need to grab. So here we go, 74.19, 74.18 has some orders available, so 53.39. By the way, all of these orders on the dome, they're limit orders. They're there waiting up for grabs, pretty much from anyone, but yeah. So I would need to work a zone from 74.18. So maybe plop in 10 at 74.18. Maybe do another 5 at 74.19. And then maybe do another 10 at 74.40, do then another 10 at 74.48, and do another 10 at 74.50. So all of those prices have decent liquidity there. So I can't just go, I'm going to trade 70 lots anywhere. You have to think about the execution. It becomes more difficult at that point. But at the same time, if you have S&P, let's have a look at the ES dome. This is a thicker market, but today it's not going to be as thick as normal. However, already at 56.60, we have 118 contracts. So you could plop in maybe 50 contracts at that price. Maybe you can do another 50 up at 56.61, where we have 96 contracts available. So all of that makes it a little bit easier for larger sizes. Hopefully this explanation is getting you on the right track of understanding why we look for those liquidity levels. Why people with size, those who can truly move the markets, are looking to move prices up or down to liquidity levels. It's not to stop run you. They don't give a monkeys about your stops, okay? They are looking for liquidity pools where they can execute their trades at the most efficient way, for least amount of executions. But if you're a muppet and you're working for a company and you you could execute a trade of, let's say, 100 lots in 3 orders, therefore only paying 3 round commissions per contract. But then you're a little bit grasshopper, you don't wait, and then you just go 2 contracts here, 2 contracts there, 5 contracts there, paying a round turn commission for each of those each of the times and racking up execution costs. And then your risk manager goes, what is this, $2,000 of commissions on the day? And you go, I was executing 100 lots. What, in 1,000,000 trades? Just racking up commissions? And then you would get told, try to get that cost down, please, because that's not good. And then you have to start thinking outside of the box. And suddenly this is where these liquidity pools come into play. Now, the way I trade, every time there is a supply or demand level or an exhaustion of a move or extreme of the day, there will always be more liquidity there because those are natural points where people will have more orders waiting, if that makes sense. Tom Quimby says, I wonder what you're going to talk about for the rest of the week because this stream is jam-packed with you. Don't worry, mate. I've got lots of ammo. All right, guys. So this will be it for me. Yes, I do live in London, John. So I live in the UK. Yeah, the UK. London. But I'm moving to West Sussex, which is kind of like the countryside. And it's not too far away from London, but yeah. All right. So to remind you guys, there will be no main broadcast today. No main broadcast. Everybody else is off. Nick for a Tick did his market prep open yesterday. I'm doing the London session, so we're still providing content for you guys, but the main broadcast, the main dudes are off to enjoy their Labor Day. They will be back on Tuesday. I will also be back on Tuesday, and Dakota will be back on Monday evening, I believe. Let me just double check that. Yeah, so he was off yesterday. The slow markets will be going through as usual this evening. And then we're also going to have Coach Jay at the buzzer tomorrow with his segments. So that is it for the day. I'm going to see whether there are any other questions, but I don't think so. Educated minds, can you show settings? Because my screen is not showing orders. It is because you need level 2 data. I literally just explained that. You need to go into billing. If you want to see 100 levels deep or 10 levels deep, depending on the market, you need to go into your Topstep dashboard. Not this dashboard, but you need to go into billing, and then there's a section when you scroll down. Sign up for level 2 data. That's what you want. Okay, so go get that, and then you will be it will show up right immediately. Okay, no more questions. That is it. Enjoy your Labor Day if you celebrate. I'm gonna go and do something else and enjoy the day with my doggos. Maybe even do some DEX trading, but for now I don't have a setup there yet. In the meantime, don't do anything stupid. Don't overtrade today, please. This is a holiday day. It's probably all going to be pretty light and fake outy. So yeah, stay safe, and I will see you guys tomorrow. Take care.